Meera, I can't even see my face, okay?
Hello and welcome to Unconvention. For those of you who've just joined us and could not attend the sessions earlier, the recording of those sessions should be up on the platform soon. By the way, we're very excited about the next session hosted by our knowledge partner, Terwilliger Center for Innovation and Shelter at Habitat for Humanity International. During this session, Ms. Jyoti Patel, Senior Director for Impact Investments at TCIS, will speak about building the business case for housing microfinance. So we are also joined by Ms. Meera Shiva, the lead at Shelter Tech Accelerator in India for Terwilliger Center for Innovation in Shelter. So the session is going to be extremely helpful and informative for entrepreneurs from the shelter tech space and affordable housing space. Over to you, Meera.
Thank you, Bala. It is great to be here. Back, we were here yesterday for a session on 3D printing, and this morning for a session on a masterclass on doing pilots. So it's great to be partnering with Wilgrow and have this opportunity to host these sessions. And today it's an absolute delight for me to be working with Jyoti Patel, who is a great colleague, and absolute honor to be introducing her today. Jyoti Patel is a senior director, and she leads the impact investment practice at the Terwilliger Center for Innovation in Shelter at Habitat for Humanity International. Jyoti oversees the operations of Microbill, which is $100 million housing microfinance fund, and it is one of the very first sector fund of its kind. The fund provides capital and technical assistance to microfinance institution. It's a global fund. Jyoti will cover a whole lot of all the nitty-gritties of this fund in the talk today. Jyoti also manages the Shelter Venture Fund that invests in enterprises globally, and these are enterprises and entrepreneurs who offer innovative products and solutions along the affordable housing value chain. So it's an innovation focused fund with equity, debt, and grant, while the micro build fund is more a debt fund. The focus of this talk is less on Shelter Venture Fund, but you can catch up with her on this as well in the networking session, which comes later. Jyoti has been with Habitat for over 8 years. And she has worked in the impact investment sector since 2008. Overall, she has 15 years of experience in the private sector, equity and fixed income investments, creating quantitative equity trading strategies and portfolio stock selection models, as well as implementing risk management systems at leading US asset management firms. She's a Wall Street pro, and she also teaches finance and other classes at Wharton as well. So it is a great honor, and thank you so much, Jyoti, for waking up so early in the morning. She's working out of Washington DC, so it's early morning hours for her. Thank you so much for doing this talk, and over to you.
Meera, thank you so much for this kind introduction, and thank you to Bala and Wilgrow for the opportunity to talk about our program here today. So before we start the session, I just wanted to point you to the fact that there is going to be a poll. We would love to know what your experience has been in this particular sector. And so there's going to be a poll, and please respond to that poll so that we can make this more dynamic and a very lively session. So, building the business case for housing microfinance, how, as Meera pointed out, we began into this space some 8 years ago with the Microbuild Fund. What I'm going to do today is, sort of lay the ground on why we started this, and what has been the experience, and then how we can make this much more um, widely available as a product, and how we can bring much needed finance to a sector that has been very deprived in general. So, beginning with the crisis and opportunity. So, we talk about how many people in the world live in inadequate shelter, but when you put a number behind it, and these numbers have been derived from the McKinsey study, from the World Bank, we talk about generally 1.6 billion people that live in inadequate or poorly built shelter. But this crisis is becoming even more compounded when you talk of rapid urbanization, as economic opportunities lead people to migrate from villages to the cities. Housing becomes even more critical, and it has exacerbated this crisis of affordable housing. When you also look at low income countries, you find that while urban areas are very well developed, there are you will see shanty towns you know coming out in the periphery. The reason being that there is very limited supply of affordable housing, whether it is to be able to own or even to rent. Last year was a very challenging year when pandemic hit most of the nations across the globe. It became a critical moment in history. When people are asked to shelter in place, the link between housing and health cannot be undermined. And it is more and more urgent now that we discuss how to create spaces that people can safely shelter in. But more importantly, there is an emerging lower and lower to upper middle class that has really sustained, lifted millions out of poverty because economic growth has allowed people to invest in their home. So this is more the ground around what are the crises in affordable housing. The reality is even quite different. More than 20% of households do not have access to formal financial sector, meaning they cannot go to a bank for even opening an account or forget about even mortgage. So even less number, I think when we did the research, it was like less than 3% folks across the globe have access to formal mortgage. But more importantly, they also lack access to quality material and products. Generally people tend to build themselves, in low income countries, and they build incrementally as and when their income allows them. So having access to not just finance but access to good quality and materials becomes even more critical, because you want to make sure that the house that people tend to self build is one of quality. So I'm going to move over. What I will do is also pause after a couple of slides to sort of have a more dynamic question and an answer session. So typically, if you look at the microfinance sector, the microfinance sector has really grown, right? When people got access to the micro enterprise loans, working capital to grow their businesses. Um, but what we noticed is that during a study, that microfinance sector has been very slow to adopt to newer products. The reason being, we can discuss later, but what we noticed also in this research was that when people borrow for micro enterprise purposes, they tend to divert 10 to 20% of that loans that are borrowed for enterprise towards housing, because people need to fix a leaking roof, they need to install a toilet. They don't have a real means to do that. And more importantly, microfinance industry or a sector has really, really grown, since the time of Muhammad Yunus, and even much before, where in India they started these self-help groups in the 60s. What we noticed that less than 2% of the entire combined portfolio of over 60 billion is dedicated to housing. And the reason is because micro enterprise loans are generally less than 12 months. They are very quick turnaround. People borrow and repay, and they start another business or so on and so forth. Whereas with housing, it has a long gestation period. So most microfinance institutions do not have access to long term capital. When they lack that access, they are not able to provide similarly long term loans to their borrowing clients. But also, more importantly, as a collateral, we tend to have our house title as a collateral, but there's no secure tenure for most population in low income countries. The reason being that they have lived on that land for maybe 10, 20 years or generations, but they don't have formal title to that land. Once they lack that title, they are not able to build any asset over it. But also, more importantly, is the inability of microfinance institutions to really develop the technical capacity for developing a very dedicated product such as housing microfinance. So, what we did as Habitat for Humanity, we created this vehicle, special investment vehicle called the Microbuild Fund. It was the first sector dedicated fund of its kind for housing. So the idea for Habitat was that we wanted to demonstrate the financial viability and scale opportunity of housing microfinance for microfinance institution, but also to the impact investment community that have really fought shy of investing in such a sector. We also wanted to catalyze like incremental housing solution. We know most people build as and when their cash flows allow. So why not allow them an opportunity to borrow over a period of time to build their home? And our goal was that if there was 2% dedicated to housing microfinance by the investee institutions, we wanted to move it to 10%. So what we did was we used a blended finance approach to solve this problem of affordable housing. How blended finance? We brought in equity, we brought in debt, there were standby letters of guarantee, we brought in philanthropic capital to do technical assistance, and then we used all of these mechanisms to create this vehicle that would allow us to train microfinance institution to disseminate housing loans. This particular fund is a finite life, because it is a demonstration fund. So the idea is that we will close this fund with 12 and a half years, and the fund will fully close down by June 2025, with the idea that we would have catalyzed sufficient funds for the microfinance institution that they can then take it over and grow this portfolio. How do we fund? We typically fund them with senior debt. Size is $500,000 to $4 million, and lending terms are between 2 years to 6 years, with average term of about 4 years. Our experience has been that in India, for example, where we lend to affordable housing institutions, we tend to give much larger loan, which is about 6 years. And how is the fund structured? I talked about wanting to give you a practitioner's perspective and a very pragmatic approach to this fund. How did we structure this fund? So as you can see in the visual, you will see nearly 90 million of debt was provided by OPIC, which is the Overseas Private Investment Corporation. It is a government body. US Treasury oversees this institution. It changed its name to US Development Finance Institution, so the USDFC. There was a 10 million component of equity that was held between Habitat, which is the majority owner, and there is another partner called MetLife Foundation and Umidyar Network. Triple Jump is a minority partner, but also the fund's manager. They are based out of Netherlands. And then because there is a high leverage component, right? There's 90 million debt. So we needed to make sure that we are able to repay this to the DFC. As a result, we had to commit nearly 10 million in standby letters of credit or letters of credit guarantee. So in order to make this special purpose investment vehicle work, we created a Delaware-based limited liability company. And then we had another lending entity, which is based out of Netherlands because of the double taxation laws. And then there was a technical assistance facility, which is 10% of the fund size or about $10 million. So all in all, as a fund sponsor, Habitat committed nearly $25 million to this particular project. Then the lending entity provides debt or deposit loans or non-convertible debentures to microfinance institution, who then on-lend to their clients. And this training that Habitat has committed, the technical assistance facility, is provided by all our experts that are based out of our financial, our FICM team, which is another vertical within the Terwilliger Center, or how we renamed it as the Global Institute for Retail Finance. So they are based all over the world, and they provide technical assistance to the borrowing institutions so that they can strengthen this product and take it to scale. How do we select institutions for this particular purpose? So of course, we want to make sure that, as a demonstration fund, we want to make sure that they have the ability to repay the loan that they borrowed from us. So we look at investment or credit criteria, which are they operationally sustainable? What is their PAR 30? PAR 30 is an acronym for portfolio at risk greater than 30 days. We want to make sure that it is within the industry or the national averages. What is the write-off ratio? Write-off ratio is typically loans that institutions have given to their clients but have not been able to collect, and over a period of time, regulation requires that they write this loans off. So we want to make sure that it is below 5%. We also want to make sure that they are not highly levered themselves, because high leverage means possibility of default. So we want to make sure that for different types of institution that borrow from us, that they are within these boundaries. So that's the credit or the investment criteria. But we are also very much focused on housing criteria. Why? Because we want to make sure that the companies or the institutions that we work with have a product champion. So we definitely look for management commitment. We want to make sure that the senior management and the general people that are in the lending business are on board and committed to making housing a priority. We also want to make sure that the borrowing institutions have good MI systems, because we want to make sure that they are able to carve out a portfolio that is dedicated towards housing and from their general portfolio. So we want to make sure that housing is easily identified in their databases. We also look for companies that have institutions that have at least $300,000 in portfolio in housing. And then we look for institutions that are willing to put housing support services for their end clients. It could be as minimal as providing a brochure on how to build properly, or even list of service and product providers, like who is the best person to give you cement, and where can you go and buy, if you're interested in installing toilets, where can you go? So these kind of things. One thing that I also wanted to point out is that because there are many number of institutions that may not have a minimum housing portfolio, what we do is we go in with technical intervention first, and then we fund them at a later stage. So the idea is that we bundle these loans together with technical assistance and with housing finance loans. And then after these assessments, the qualifying institutions enter what we call as a formal investment pipeline. What is our technical advisory component that Habitat provides? We conduct local market research. We create a need-based assessment of what the borrowers of the microfinance institutions need. These end clients, ultimately, they are our target group. We help them refine their existing products, or we help them define new products based on this market research. We pilot these products at few branches of the institution, and then do a full pilot rollout based on the success, and where we can create any tweaks as necessary based out of our pilot experience. More importantly, we build the capacity of the microfinance institution to really do longer term, larger size loans, because the underwriting for this is very different from these typical micro enterprise small loans. And then we seek integration with related property, formalization, hardware, cement, and such. In the end, we also monitor and evaluate and learn from our experiences for these loans to the microfinance institutions. I'm going to stop here because I've given you a lot of context, and I want to pause here for any question, because then the next set of slides are talking about how you can create a very dynamic structure for using a debt facility like this, which is $90 million to 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 lend. So I'm going to pause here for questions. So Meera and Bala, if you can let me know if there are any questions, that would be great.
So, I just want to share first the results of the poll, the two polls that we did so far. So, I wrote it down to show it. It's 100%. So, the first question we asked was, how much of a strong need do you feel for housing microfinance product in your area of work? And 100% of the respondents said there is a strong need. The other options were some need and not a lot of need. So definitely, this is a great endorsement of the need for this product, and also the success of the program, bears it out. And the follow on to that was, how well has it worked, right? And with the choices on, it has worked well, it has not worked well because there was something problem with the product itself, and the third was, it has not worked well, but we are not sure why it did not work, and maybe some people have not have that much experience in the success or failure of a housing a microfinance product. So 25% said it has worked well. 25% did not have much experience, but the bulk, the 50%, half the group, said that it did not work, but why it failed is unclear. So, Jyoti, sitting where you are, any thoughts from the experience of putting together a successful fund? What were some of the risk factors and failure fragility weak links that you try to plug and right ensure that things work well?
So Mira, one of the 8 years later with this fund, one of the most evident experience is that macroeconomic environment, and I can give you an example. So we have an investment in Lebanon. Lebanon underwent severe crisis towards the end of 2019 when the government basically clamped down and put in stringent capital controls. What that meant was that there was no repatriation of capital outside of the country, which so basically the Lebanese pound is pegged with the US dollar. What happened then was that the pound depreciated severely and there was a black market. But our loan that we had given to the institution, they could not service it because they had the ability to pay our interest and also one of the first tranches of the loan that came due, but they could not repatriate the capital. Now take this scenario and compound it with COVID crisis, right? So then COVID crisis hit in March of last year. And then anything that could go wrong went wrong when the Beirut port explosion happened. So, what I'm trying to say is that in general, what we have noticed, we have 55 institutions, and I'll talk more about what the contributing factors for success are towards the end of this program. But most importantly is that we work in very fragile economies, across the globe, because that's where the need is greatest. And so we have to really bear in mind that the institutions themselves are very, very resilient, but they are failed by their political system.
Mm,
So
mm.
that any like in the institutions portfolio that we have across 32 countries, there's not one failure because of a credit default, but failure because of government clampdown. This is a case in Lebanon. We had similar case in Azerbaijan because Azerbaijan overnight decided that they wanted to throw all of the NGOs and the likes of Oxfam out of the country, because these are very dictatorial governments, right? In the end, how do we work? We restructure loans, we work because these are good partners and we don't want them to go belly up because these are very minor infarctions, in an overall industry, which, like, for example, Al Majmu has been working in this sector since last 25 years. So international lenders are very vested in its success. So we try to work with institutions. And in general, one of the things that we also notice, aside from this extraneous macroeconomic factor, is also at the institution level. The institution has to be absolutely vested in their commitment towards doing housing microfinance. If they don't have a product champion, it won't work. So I'll pause there.
Yeah. So there are three more questions. One somewhat quick, easy one is what is the size of operations for microbuild in India? Right? Can you give an India context view?
Absolutely. So this is a loan that we got from the DFC, which is formerly known as OPEC. So they obviously, with a $90 million, they have stringent covenants around this loan. So technically, we cannot have more than 15% exposure in a single country or $10 million, whichever is less. So our exposure to India is limited to $10 million. And we do very large size loans, right? 3 million or 4 million. And we've typically worked with either NBFCs or housing finance companies in India. And those loans are the ones that I spoke earlier that have a 6-year tenor, and then we have a put option in place. So we don't want to like bind the company for 6 years and say you have to take this loan. In the end, if they have better operations, they don't need us. We give them the flexibility to repay us, if they've achieved their objective of really scaling housing microfinance and are able to, get local currency loans so that they don't have to do hedging.
Okay, and there is one more which is on the use of digital tools and methods, right? I mean, there's a lot of hope and possibilities with fintech and the various products that are coming up. How do you see the role, or how has Microbuild viewed these and used these digital tools?
I think it is so critical, Meera. And I'll give another example, albeit it's not in India, but it's in Indonesia. Our team from Manila is very closely working with a company that we have actually funded through our Shelter Venture Fund. But these were all organic, So we started working with this digital formalization company based out of Netherlands, and they do land formalization. And the idea is that we work with a cooperative in Indonesia that we have already worked with by developing a housing microfinance product so that we can bundle a product that is people can access for, let's say, securing a formal title to their land and then bundling it with housing improvement loans. 3% of population in Indonesia have formal title. The rest do not have access to secure tenure. So there's always this fear that they might be appended from the land that they have lived on generations. So this is one great example of how we bring fintech into play for promoting housing microfinance.
Which actually ties well with the next question, which is on land, right? Because housing starts with having access to land and titles, and getting these from the government, or working with the government agencies on this. What has Microbuild's experience been with it? And given the audience maybe a bit more on the Indian side, but a global view also, to give the overarching guideline. Yeah.
So we do monitor. One of the benefits of having a strong MI system is that the ability of institution to tell us how their clients are using their loans, right? So when we started, our loan usage was typically focused on home improvement, like small construction and so on. What we've seen over a period of time is move or shift towards land acquisition and formal building. So which is great news, right? So in the India context, it's even greater because India has really created this mechanism for housing for all by the federal government, right? So the prime minister has created this um, I don't know how to say, the Prime Minister Awas Yojana, which is like housing for all by
Mm-hmm.
2022. It's a very tall order, but I think it is very relevant, right? So HFCs that we funded, they actually work either with developers or with um, clients that are going to self-build, and then they provide them with larger size, longer term loans. So the land is secured first, and then they build over several tranches of loans. So that's one example of owner-led construction. But also, in my experience, when I visited India, when we were funding this company out of Gurgaon, was that when you go to meet the clients and you see that actually they are buying, they are people that have no formal sources of income. They could be taxi driver or a tailor. They don't have regular source of income, right? So this company has really mastered the underwriting model to lend to informal earners. And so, I visited two, three clients. One of them was a tailor, and the tailor basically they do this assessment of the tailor's capacity to repay this loan, which could be as much as 10,000 US dollars or 15,000 US dollars, and they buy an affordable house which is built by a developer. So there are different mechanisms, in the Indian context. In the general context outside of US, what we've noticed is that there is a shift towards more formal construction, but there are regulations that don't permit it. So we just have to be very mindful because if your interest rates are capped, and there are different interest rates for mortgages, then you have to work around it. So the experience is evolving, which is what I will also talk about, what we may do if there is a potential second fund.
Okay,
So
thank you,
I don't know
Jyoti.
how we are doing on time, but I just want to make sure
So
that
we
I
are at near the halfway mark. So, why don't you
fantastic.
continue, and then, yeah.
Thank you so much for these questions, and please keep them coming. I don't want this to be a one-sided dialogue. So this is great. So moving on, you know, we this is a very highly levered fund, which with 90 million from the DFC, which we are on hook to repay, because we want to create a demonstration to say that we can manage such a large fund and manage it really well. So one of the things is our ability to repay the loan that we've taken from the US government. So what we've done is how we have attracted, uh, like how we have used debt by looking at credit enhancement through philanthropic capital, right? So Habitat has a strong brand name and it is very well known in the US. You know, it was President Carter, former President Carter was very closely and is still closely associated with Habitat built around the globe. So we have been able to garner a lot of goodwill and a lot of grant money from our donors. So what we do is the donors Habitat pools its own money with that of the donor for the 10 million that we have committed towards the standby letters of credit. So what we do is that we have this mechanism where Habitat fundraises for this capital, and the donor, let's say we have an ex donor with a you know account with Bank of America. I'm just making this hypothetically. So the donor will pledge, let's say, 2 or 3 million of his or her asset to Bank of America, who will then create a LC in favor of the commercial bank for Habitat, and then that Habitat's bank will create a LC in favor of OPIC. So far we've had 10 million already committed because we fully drew down the 90 million. We've not had to ever resort to a standby letters of credit in the first 8 years. So that is a testimony to how well this fund has been run, you know. So there are ways to do it, but it is the hardest because people don't want to tie their capital in pledging their assets towards standby letters of credit. So we have to look for other mechanism where we can create a guarantee facility to attract debt into the space. Similarly, foreign exchange, right? So take the case of India, there's high volatility against the dollar because all the lending happens either in euro or in dollar denomination. So we have to, make sure that we are able to hedge these loans. Now, hedging can become very prohibitively expensive in countries like Philippines or in Indonesia, and India has, of course, a very thriving market for foreign exchange, but the volatile currency does make us, it gives us a pause because we don't want to lose or devalue the value of the portfolio through the forex devaluation, right? So again, we use this blended capital approach, donor money to do this. So what we did, so there were instances, where one of the donors said, why don't you go and work in Philippines? And we said, instead of just working in Philippines, why don't you give us $1 million that we can create like a hedging pool, and we can hedge this internally. So we use this mechanism, most of you might be familiar with this terminology, where we use a correlation matrix of creating currencies that are completely uncorrelated with one another. Of course, our world is much more integrated now, but in general, what happens in Ecuador may not impact India or any other country in the world as much, because they are the macroeconomic economics are very largely uncorrelated, but that's not true these days, right? But having said that, what we created was a correlation matrix of 10 currencies that were hopefully unrelated to each other or negatively correlated to each other. And we used that mechanism where we had these very exotic currencies that we wanted to bring housing microfinance to that country, but the currency volatility prevented us. So we created this internal hedging mechanism where Habitat and Triple Jump together manage that 10 million of portfolio to do more local currency loans. So what has been Microbill Fund's impact to date? To date, we have disbursed a total of $137 million to 55 institutions across 32 countries. Most of them are very fragile economies. But we've also renewed loans for 22 institutions in 16 countries to the extent of nearly 37 million. So total turnover of this $100 million fund is upwards of $170 million. We have still 5 more years to go, so we will continue very prudently to engage with institutions that have really grown this portfolio and continue to bring more liquidity into the market. We've, as of date, we've spent nearly 9 million of the 10 million committed in technical assistance. 190,000 households have directly benefited. When I say directly, it is through microbuild funding. We don't take into consideration the additional money that has been catalyzed by the microfinance institutions themselves to grow this product. So that has impacted nearly 950,000 individuals across the globe. I talked a little bit about how the usage of loans has been, so typically what we see as of December, or this is September data, sorry, the breakdown is that you see a large number of loans that are between home improvement and small construction, and about 17% in formal housing and about 6% in land tenure or land acquisition. We started this fund with the premise of really catalyzing or mobilizing additional capital into the sector. Catalytic growth for housing, microfinance for microbuild has been amazing in the sense that, this money that we pumped into the market, $427 million have been raised by microbuild investee institutions to grow their portfolio. 12% of microbuild's investee portfolio is dedicated to housing, with a range between, let's say, 8% to nearly 40% of portfolio in housing. And when we look at the compounded annual growth of housing, we say that it's more than like 200 basis points more than the general portfolio of any microfinance institutions that is in our microbuild portfolio. And of course, we also want to keep an eye on sustainability. Is it sustainable for the fund? Is it sustainable for the microfinance institutions that are lending this new product? And what we have noticed is that the portfolio at risk for 30 days is lower by almost between 200 to 400 basis point, or 2 to 4% compared to the overall loan portfolio. And microbuild fund itself is self-sustaining and profit-making. Our goal when we started this was that we wanted to preserve the capital, meaning if we had put in $100 million into the market, we were able to preserve this. But because we managed this fund so well, the fund is shown modest returns, with an IRR, I would say, that is at about 6%. So, this whole idea of talking about this session was, how do we build a business case for housing microfinance? We know that low-income housing finance or low-income countries across the globe have typical characteristics, right? There is issue of affordability because there's the gap between the demand and the supply for housing is so vast that it's hard to fulfill that in a meaningful way. Also, the changing demographics, right? As younger population migrate from rural to urban areas in search of employment, it creates even more need for adequate and affordable housing without having to resort to, informal settlements that you see, let's say in Kenya or in India, especially in Mumbai or in Nairobi. You see these sprawling slums, which even exacerbates this whole housing crisis. We also need to recognize the fact that most people in low-income countries build incrementally and they tend to self-build. So we need to address issues and bring products that are relevant to such a target market and not say one size fits all. And then also we want to make sure that the lenders themselves are vested in the fact that they allow the borrowing clients to pursue secure title or formal title that they can build their assets on, So Meera, you talked about earlier what are the contributing success to scaling housing microfinance, and we want to make sure that you have enabling regulatory environment. And I think India has really done a great job there compared to other nations, in terms of really formalizing this housing need, right? So you may see that in Ecuador, there is also a great need, but the government has not really stepped up. And I think it is absolutely mandatory for regulatory environment to be so conducive for making housing, affordable housing, accessible to everybody. And then we want to make sure that borrowing institutions have access to long-term capital. Because if you find clients that do not have this access, so let's say they are borrowing for 12 months and using that loan for a longer purpose, like building a house that is 3 years, and there's going to create asset liability mismatch. Same thing for the funds, right? For impact investors, they have to really show some gumption in creating environment for long-term lending. So you can't just give them 2-year loan and expect them to lend for 4 years. So this is very, very critical for the success of such a product. We want to also ensure that there are lower hedging costs. How do we lower hedging costs? Because some markets you simply cannot, right? Because the currency is too volatile. How do we do that? We create mechanism by, like how we did with internal hedging, or creating a subsidy through philanthropic capital that allows us to bring much needed capital in countries where hedging is not possible. Of course, we want to make sure that the lending spread is allows for the fund to operate well, but also to for the costs to be able to um, make sure that the institutions themselves, right? So let's say you have an MFI or a NBFC that is providing this capital, they have to make sure that their operating costs are well managed, because those are the costs that really bring the interest rate higher. But of course, in countries like India, you have interest rate caps, so it, it's a moot point. And then, of course, we have to focus on other alternatives. Not everybody um, can build a home. We want to make sure that the rental market is accessible to. This rental market has become very prevalent actually in sub-Saharan Africa, in our experience when we did a study there through our lending in Uganda and in Kenya. What landlords do is that they borrow money to create an additional structure for people that are in the peripheral areas from urban. So between rural to urban, they create this structure within the periphery of their workplaces, so that you can create a thriving rental market. So these are things that we believe, in our experience, creates to the success of a well-run fund, and for a product like housing microfinance to grow. I think I'm towards the end of my slide, so thank you so much. And I'm going to open this session up for question, and hopefully we will make it much more spirited and dynamic. So
Thank you,
please.
Jyoti. Yeah. So, you spoke about the cost factors and the risk factors, which all go into the affordability of the loans, right? What is the interest rate and the cash flow needs of the people. So there was the things you spoke on, where keeping the operating costs low, and for the fund itself to reduce the cost of the capital that they on lend on to the microfinance companies, and for those that are doing the lending to the retail, to manage their risks. The example you said of better credit underwriting, which reduces the risk, which can help them reduce the cost of the interest on the loans. Now the question is, it is still, I think, the reminiscent of the microfinance crisis in India, and then in general, uh, the rate of interest for any loan, even a housing loan, right? I mean, housing loans are normally cheaper than an unsecured lending for other aspects. But even there, in the low income segment, the interest rates are still very high, and seen as predatory. So the question asked was, what can one do? And right, and in the context of micro bill fund, what are the checks and balance you put in place to make sure that the end customer is not feeling any pressure from the product?
So such a great question, Meera, and I think it is very relevant to point out. I think the crisis that happened in India was, unfortunately, it was like, arming people. It's to some extent, I would even compare it to the housing crisis here, right? The financial crisis of 2008 in the US. What happens is that when there are pressures, right, at microfinance institutions to grow, they tend to not train their loan officers, and they are going out and doing multiple lending when the client has really serious inability to repay even one loan. So what came into place was that every institution, especially for microbuild, it is mandatory that they adhere to the the lending principle, or what we call as a client protection principle, and they have to endorse the smart campaign, which has a number of criteria they have to adhere to. But also, when we lend or when we bring a institution in the portfolio, there's like a sector-wide approach that we have taken, where we assess on a number of parameters and dimensions that protect the client in the end, so that interest rates are not predatory. So I have to tell you this, that every country that we go to, we are now in 32 countries, right? We have to make sure that the lending rates that we provide to the institution are within the national averages. If not, we don't lend them any money. In the end, microbill has a benchmark return, which is very low actually. But we can't go into countries like, let's say, Philippines, where you have 3% lending, because so much liquidity is pumped into the country that there is just no way for other commercial actors to compete, right? So first and foremost, we have to adhere to the client protection principles and make sure. And I think a lot, because after the crisis, a lot of institutions have created mechanism where they are able to look at the credit scores to make sure that the credit agencies are able to clearly point out whether a client or a borrowing client has more than two loans, or a number of loans, and if that is the case, they don't lend it to them. So yeah, institutions have one reasons to grow because they want to grow their portfolio, but they cannot grow at the cost of the client. So I think these kind of measures where client protection principles, it is at the helm, at the center of it, allows us to make sure that we are not lending at predatory lending rates, or ensuring that the client has a capacity to repay. And this is where dedicated product like housing microfinance comes into play, right, Mira? Because we are creating a product which is larger sized, longer term, allows clients to borrow, that meets their funding needs and their repayment capacity. So all of this is, I think, important in bearing when you assess whether or not it is, the lending rates are predatory. More importantly, we have a very stringent investment committee that is formed of like the who's who in microfinance sector and the impact investment sector, and they keep us grounded. So we cannot bring any, like at the time of pre-clearance, when we do the credit assessment or the housing microfinance assessment, if they don't meet the client protection criteria, they don't even end up in our pipeline.
Okay. So there's, one more question on the data that you have from all the work and all the loans that have been given out over a period of time. So what has been the um, secondary effect of having access to a good housing loan for the end customer, right? Is there any data or study or assessment on the overall benefits and impact it has
Yeah,
created?
in India, we have another dedicated housing finance company called Microbill India, and they have also done a lot of lending through that facility, because India is a subcontinent. We can't bring $10 million and expect that overnight it will become, a thriving market for housing finance. So that entity has done a number of um, studies, and of course, we have done a number of studies around end clients, and the results are mixed, right? So we did with very early in the process, we did a study with Oxfam, and our goal is to really bring about a very neutral um, entity that assesses it, because that's what is going to help us get better. And they did studies in Bosnia, where most people, or Bosnia and Herzegovina, and in one of the other countries in ECA, where most people buy or borrow for winterizing their homes, so they want to make their homes energy efficient. So where we did see a number of people that whose health improved. So we did like a basic difference on different studies, and then we've done such studies in Uganda, where we've done just technical assistance and not any lending. And these studies do point to the benefit of having a dedicated housing microfinance loan product, because it allows the clients, to address many other interconnected needs, right? It's not just housing, because housing is so holistic. It allows them to address needs for water and sanitation, to have access to renewable energy, to have access to education and so on. And I think, I mean, there are numerous studies to cite, so it's very hard for me to point to any one study. But as I said, the results are mixed, but more satisfactory towards the case for housing finance. If we were to go and ask that, oh, has your energy bill decreased? Most people will say yes, because they have been able to put proper insulation in their homes. But did it create any let's say any side effects in increasing your income? Then we would say the demonstration was rather low. So I think we have to really do very rigorous studies around this, which we did with Uganda and Kenya, and the results are on our website, where housing microfinance has really grown, and it has created a much needed impact on the borrowing family.
Okay, so that sort of ties to the next question, which is on these various uh, products and services that you mentioned in energy saving, water and sanitation, maybe even better roofing, or flooring or other products. How do you see the role of such products and the role of microfinance in promoting better and products and solutions to the household?
Absolutely vital, Mira, because which is why we talked early on about the Shelter Venture Fund. And so Microbill is a vehicle that we created for providing access to finance, right? Now what we are doing is addressing this need by what we have started in 2017 is a Shelter Venture Fund, which in, invests in companies that are addressing, creating innovative products and services along the housing value chain. So I can give you an example of one of our portfolio companies. For example, they provide roofing, modular roofing in Ahmedabad, and their clients are able to secure microfinance loans to borrow to be able to put a proper roof that is going to replace a tin sheet roof, for example. So it's so vital, the connection between access to finance and allowing a thriving ecosystem for entrepreneurs that are creating these innovative products and services to be brought into this value chain, to create a very a proper ecosystem, for a lack of better word, around housing.
Okay. And through the journey of Microbill, right, starting 8 years ago and working in various countries, how have you seen the discussions and the environment around housing microfinance, right? I'm sure when you started 8 years ago, people would have been like, what, right? And how has it progressed over the years?
And I think this is where a dedicated technical assistance comes into play, right? When you have a very well designed product that addresses the local country region's need, and you pair it with access to finance, then it is a recipe for success, right? So every technical assistance that we have done in all of the countries where we have, and those countries where Microbill is not funded, but we provided technical assistance nevertheless, is the recipe, right? So our team goes in, they understand the local needs, they propose a product that is, relevant to that region or that country, and then they do a pilot testing. It's such a rigorous process, and I think that has contributed to the success. Now, if you'll ask me, in Peru, we have 3 investments. Did all of them succeed? Well, no. The reason being that you have to absolutely have a product champion. So, 2 institutions in Peru have grown beyond our wildest dreams, and one institution simply did not take off. Why? Because that institution had so many turnover of people. So, you could not have like somebody who could be a product champion to take this forward. So, we can bring our technical assistance and we can bring our expertise to the institution, but if they do not have the bandwidth to take this and then scale it out, then it won't succeed. So we have, I would say, about out 55 institutions, I would say perfectly candidly, 3 institutions did not succeed or had succeeded but could not because of this government
Mm-hmm.
measure that came overnight with devaluation of currencies and whatnot in, say, ECA region, and 2 others that just simply did not have a product champion.
Okay, which
So which is a great track record, actually.
yeah. I mean, that's not a failure at all, right? Because I think 100% success is just not even in the probability thing, right? I mean, it's just impossible.
No, but I
So
think because of the demonstration fund, we do want to make sure, and which is why we are so stringent with the kind of institutions we select in the portfolio, and those that are able to take our technical assistance and take it to scale, So yeah.
so if there is a microfinance institution that wants to work with microbuild, right? How do you find these institution, and how are these uh, picked up and the relationships built leading on to the investment?
So, like typical ways, we have Triple Jump, who's a fund manager. They manage other portfolios as well. So, we may, go to them and see whether they are interested in such a dedicated product. We meet them at conferences through word of mouth. And of course, now Microbuild is in a wind down stage, right? We started repaying the DFC loan since 2019. So, very few new loans will come. We will continue to work with mostly institutions that have taken this to scale. That's not to say that we won't bring like another country into the fold or another new institution, but it will happen much more at a much lower rate than others. But typically, the way we source pipeline is through word of mouth. One institution has done in Peru, then others are looking to see whether they can take this up, in a different region and so on. So it's mix of everything. But primarily, Triple Jump was very instrumental in the early days because they already had portfolio of companies through their other funds to see whether we could bring. And then we do, like we have also done, what we do is road shows, so we went to Cambodia and we went to Sri Lanka, we went to Ecuador, and we tried to do like, we go and meet institutions and then we talk to them about this product, and then see whether they have any interest, So it's a multiple ways of moving the pipeline.
Okay. Thank you,
To
Jyoti. I don't.
remember,
Yeah,
Habitat has 70 overseas
countries
national
of operation. Yeah.
organizations. So even they are very involved and in the process, and they can bring us some, institutions as well.
Thank you, Jyoti. And I was little glad that there were no questions on COVID-19 and its impact, which makes me positive, because I think people think it's behind us and there is less point in asking that question. Any closing thoughts? Where after which you can pass the mic over to Bala. Jyoti, maybe a minute to just
Actually,
close up.
you raised such a fantastic point, right? Yeah, there were no questions around COVID, but I have to say this, that COVID started to hit us in March of 2020. And so we took a very prudent pause. We said, let's wait till we see how the companies are performing and emerging. And Mira, it is again a testimony that we may have restructured a loan for 3 months or 6 months, but none of them have gone under from COVID. So this is again a testimony of a product well designed and well managed.
Thank you. That is very optimistic. And on that optimistic note, over to you, Bala.
A big thank you, Jyoti and Meera, for sharing your expertise with us. It was such a delight to be part of this session, and we are truly lucky to have been able to learn from your wealth of experience. Thank you very much. For those of you who want to continue the conversation and interact more with Jyoti, you're in luck today. Please head to the Networking Lounge immediately to meet Jyoti and also Jitendra from Turvilgal Center for Innovation and Shelter, TCIS. Thank you very much.
Thank you.
Thank you so much for this opportunity, Bala, and to Will Grow and to the participants for showing such keen interest in this session. We appreciate it.
Thank you. Thank you so much.